What are ex-dividend record and payment dates in dividend investing? Imagine you're planning to earn income from your investments and want to make sure you get every dollar of dividends. Knowing the timing of dividend dates can make a big difference. Let's break down what these dates mean and how they work together. First, the record date is the day the company looks at its list of shareholders to decide who gets the upcoming dividend. If you want to receive the dividend, you need to be listed as a shareholder on this date. Think of it as the company's official snapshot of who owns the stock at that moment. Next is the ex-dividend date, which usually falls one business day before the record date. This date is set by the stock exchange to account for the time it takes to settle stock trades, which is generally 2 business days. If you buy the stock on or after this date, you won't receive the upcoming dividend. Instead, the seller gets the payout. To qualify for the dividend, you need to buy the stock before the ex-dividend date and hold it until at least the day before. Then there's the payment date, which is when the company actually sends out the dividend money. This can be a few weeks after the record date. On this day, if you are eligible, you'll see the dividend deposited into your account or sent as a check. Here's how it all fits together. The company announces a dividend and sets the record date. The stock exchange then sets the ex-dividend date 1 business day before the record date. If you own the stock before the ex-dividend date, you will receive the dividend on the payment date. If you buy on or after the ex-dividend date, you miss out on that payout. Understanding these dates helps you plan your buying and selling to maximize dividend income. For example, purchasing shares just before the ex-dividend date guarantees you'll get the next dividend. Selling on or after that date means you keep the dividend but the new buyer does not. Knowing these dates also helps avoid confusion about who is eligible for dividends and makes it easier to decide whether to reinvest or take the cash. It's a key part of managing your long-term dividend investment strategy.